Welcome back. One of the big stories in the stock market this morning is this story. Salesforce.com stock up by more than 10% now. This is its biggest rally, daily rally, since March of last year, March of 2023. It's all because of results that were released by Salesforce after the close of trading yesterday. Joining me to talk about these results and the stock is Derrick Wood. He's joining us from Los Angeles. He's managing director at TD Cowen. Derrick, thanks a lot for joining us. All eyes are on this stock today. I'm seeing that the company reported revenue that exceeded expectations, adjusted operating margin exceeded expectations, and it is the artificial intelligence strategy that appears to be delivering.
Yeah, I think that last part is really what's carrying the torch on the stock. The narrative around AI, there's a lot of excitement. Now, when you look at the quarter, it was a good quarter. It was a down the middle quarter. They had about a percentage beat on backlog guide. That was a similar upside as last quarter. They essentially maintained the outlook for the full year. Numbers went up a tiny bit, but generally numbers didn't change a whole lot. One data point, though, that we did get was Agentforce, which is their new product that came out in the last week of the quarter. And the company said they signed a couple hundred deals in the first week of that product going GA, and that they had thousands in the pipeline. And I think that's got people very excited around kind of this next wave of AI positioning for Salesforce. It's going to take time to show up in the numbers. The company warned us that they don't expect any material contribution to backlog next quarter and haven't given any outlook beyond that. But I think it's, numbers didn't move a whole lot, but it was just a good narrative and a lot of excitement around what's to come around AI.
Talk to us about Agentforce. What does that part of Salesforce's business do? It sounds like it's becoming a very intent focus among investors.
And it is really across the whole software space. So when ChatGPT and OpenAI really came out to market last year, a lot of companies scrambled to go build co-pilots, which were these question and answer assistants that users could use. And a lot of software companies tried to embed that in their applications. It wasn't that transformative, and there just hasn't been a whole lot of uptake. This year, over the last, call it 4, 5, 6 months, there's been a shift away from co-pilots and more towards autonomous agents. And that's where AI can really not just help assist you in creating an email or finding information, but it can help complete an entire task on its own and do it autonomously. And with Agentforce and Salesforce, they are trying to bring that, the biggest area, into their Service Cloud portfolio. So think about call center agents. Instead of humans taking calls, you can have agents take the calls, complete tasks, look up information, do that all autonomously, and deflect that away from humans. So it is just a lot more complex of a workload that AI can take on. There's a lot of other software companies trying to do it as well, but Salesforce and Mark Benioff have certainly been one of the loudest in trying to carry this torch forward in this next wave of AI.
So despite that positive commentary on Agentforce, with the company providing, as you say, several positive data points on Agentforce, the company did not raise its revenue guidance. Is it a surprise at all that the stock is soaring with the company standing pat on guidance?
Yeah, I am surprised to see it up this much. Again, I think it's the animal spirits are out back in software, and I think that's what's driving it. But there's also things that I would point out to poke at. They did close a couple acquisitions at the beginning of this quarter that have some material impact to revenue, and they did not disclose what that would, how much contribution they expected in Q4. But if we extracted that out, I think guidance would have been potentially a little weaker. Again, I'm not surprised to see the stock doing what it's doing just because there's an excitement. People want to be long software again. I mean, software was out of favor for the first half of the year. There was a rotation trade from software to semis that has completely boomeranged back. The narrative around software with AI has gotten a lot better. The macro spending environment is now stable. And for Salesforce itself, they had a hiccup in Q1, and they had a bounce back in Q2. and just to see more stability in Q3, I think, encouraging enough. Maybe the stock's a little ahead of itself in our view, but actually it was a constructive quarter.
Okay, as we're showing viewers on our screen right now, you have a hold rating on the stock, but you have bumped up your price target on the back of these results to $380 per share. How do you get to that price target?
Yeah, that assumes a 27 times free cash flow multiple on calendar 25, 24 times on calendar 26. And that's against a 9% top line CAGR growth profile that we're modeling in the medium term. That's a pretty healthy multiple for that kind of growth rate. So what we're really looking for is evidence that Agentforce, as that gets upsold and cross-sold to the base, that's going to drive a big uplift in contract value and ASPs. And it's still too early. We're hearing that the uplift is not that big, so we'd like to see more concrete evidence that can really move the needle on getting more growth out of the installed base. And then that would get us to get more confident in maybe Salesforce getting back to comfortably low double-digit growth profile. And if we could get there, we could argue a higher valuation. But at this point, for the growth we see in the near term, we think it's more fairly valued, but we're certainly more on the constructive side.